Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it is July 27th. So let's take a quick look at the economic news releases scheduled for today. So we'll start off with the durable goods orders, and the previous month came in at 2.1%. We were kind of expecting a drop of 0, and it actually came in at negative 2.1. So a pretty big swing there from about a 4.2% swing there. So that's not obviously good news for the economy where the economy is moving towards. So let's take a look at the core capital goods, and essentially what that is, it's durable goods, but they take out the volatile transportation, which could skew the numbers a bit. So that came in at 1.7 the previous month, and basically the final came in at negative 0.4%. So not good numbers overall, but again, take out the volatility, it's not as bad as well. But overall, that's where the economy looks like it's going. Looks like it's slowing down even further. We could potentially have more job losses if it slows down further. Hopefully not, and hopefully we can get something to turn this around. And then the Fed Base Book will be coming out, and that'll be basically information what the Fed's been kind of thinking, some of their notes from the meetings and such. So you get we'll hopefully hear a little bit more about that later today. But it's going to really come down to the next item here. Basically, the stock market's down this morning, and again, the same thing. All eyes are on the debt ceiling crisis, still, because unless we get this resolved, there's going to be a lot of volatility in this market. We're not having a normal market from stock market nor bond market standpoint. So we need to get this resolved. And then people, just reading on Market Watch earlier this morning that people are already asking the credit agencies when they plan to downgrade the U.S. credit as we're kind of approaching this deadline, and looks like maybe there might be a default. And but we're also have a huge debt that we're carrying as well, the balances and everything. So that could, draw speculation for future that we could default in the future or be concerned. Now, another item of note that was made was, Congress is so worked up about trying to make sure cuts in budget spending and everything, but by the stalemate and potential default that could be happening here is that because if we have a downgrade in our credit agencies, that means we could have more wasteful spending, as in paying more yields, more costs, kind of like if you pay your credit card late one month and then they raise your interest rates, your payment will go up a bit. So same thing with the U.S., but you're talking here on billions of dollars, and that could be easily what they were estimating at as much as $100 billion. So they need to get their act together, in my opinion, and hopefully you agree. So let's take a look at the bond market and see where interest rates are moving today. We had a bit of a rally yesterday. Kind of stayed up there due to the bad economic news that have been reported, and then today we started lower. So it could, if this trend keeps, we ended up here, now we started way down here. So if the rates were to come out this morning, they would be worse. It looks like they come out a little later on, and maybe this improves a bit more, maybe this will be about the same or slightly worse than yesterday. So again, no volatility. The traders are pricing these into what what this debt ceiling crisis is creating, higher costs for everybody involved. So we'll call this a wrap for today, and we'll see you tomorrow. And basically, yeah, if you have any questions or want to get more information on if you're out looking to buy a home or looking to refinance, looking for more information, check out my website at californiamortgagetips.com. And I'd love to hear from you. You guys have a wonderful day.